Greetings, market rebels. Welcome to this week's sector situation. It's Sunday, December 17th, 2023. It's a little past 3 p.m. here on the East Coast, and I'm Wayne. We're going to get into sector situation. This is going to be a brief one this week, I think. Disclaimer for you, and there's our trustee intellectual property rights notice, and I'm going to flash our stream from Macro Measure, kind of a two-slide stream this week, just to keep some important reminders on the second one and some new food for thought here that I think that I wanted to share with folks, just because I don't want to see if the gang pulls off the start of this next bull. They might only be on hype, but that might be all they need. So I wanted to just kind of plant that seed just in case, so people get thinking about stuff if they're still locked into certain ways, like I almost found myself really locked into. So I started thinking about it differently and thinking that, okay, well, maybe Main Street, it just gets tattooed all over again, and we'll go from there. So let me switch the view to another screen, and this view will be over here, screen 3. And so I'm starting out kind of strangely, I guess, for sector situation, but what I wanted to do is to make sure that everyone understands the macro implications of what's happening here with the Magnificent Seven. And these things have not broken out to new highs, so as a package. And so these have been, right, some of the big leaders, the biggest of the big and leaders as well. And also, right, the Dow, I believe, made a new all-time high. So if you think about it, how come these haven't? Well, they're very close to it, right? They could make a new all-time high very easily. And what I just wanted to point out was, right, that this kind of has that cup and handle-ish look to it, and you can see that. So here is the handle, and you could say, well, it's starting to break out there. Other folks might prefer to have the horizontal line that would say, well, no, you need to break out really above there, right, to really break out. That's really where I think the handle wherever you want, it breaks out from the top of the cup, if you want to go and give it the credit for being a cup and handle. But the point is, if you want to look at it in a more basic way, right, the trend started changing after it bottomed here, and there's a very strong move up. There was a corrective phase that we lived through from really July through the end of October, and we know what's happened since. They started to run and gun in October, broke through resistance in a week, and this is a weekly chart. I should have mentioned that. And now you can see the rest. Let's go back to a daily just for a little bit more of a look. But right now, you're well past that. You're well past that that resistance area, and this line doesn't seem like it held where I had it, which was really more like this. But maybe I messed something up. Anyway, right. So this was this nice little pullback that we talked about last week, and now this thing looks ready to go. This is right on the perch that it could start to run again, right? And maybe resistance will keep it tamped down. I don't know, but the point is it's very close, and if it breaks out, that's going to create new all-time highs, probably in the Qs, or at least get it close to new all-time highs in the Qs and spiders, which will follow the Dow. And other than IWM, the big three of the big four will be rolling into new all-time highs. Those are nominal. That was a point that I was talking about, and I saw that Michael Guyad had put something out about that. I was glad I found that. And basically, the market could rally for another 10% just to get back to where it was previously a few years ago. And that would be because due to inflation, right? So if we inflation adjust it, we need to get up 10% from here in SPY Qs to really match the same level, and to keep it consistent on a purchasing power basis. But you get the idea. But this is really textbook looking good. And so again, another strong push up, corrective activity, and now you're on the verge of leaving the corrective activity. So just be ready for that. And that's why I would say that if we go over to the sector view, which is right here, I threw the RSIs back up here because I got crushed by the Schwab switchover. They lost a lot of my custom setups and my custom indicators. It was a nightmare. Still is, but I can't fix everything. It just would take too long. I might just try to get everything done in PineScript on TradingView and just get away from Thinkorswim. But we'll see what happens with that. But the point I wanted to raise is that, as we've been saying, really in macro measure, there's really not a lot that you can nitpick about this market in terms of the technicals. Right now, you can nitpick that you've got like an 81 RSI reading on XLI. I can nitpick that too. These are things that don't normally persist for that long. You've got 77 in transports. In discretionary, consumer discretionary, you're at 80. You're at 77 in financials. But the big ones, right, the important ones have run, right? The transports have really run. They've started to participate in a big way again. Financials are participating. Discretionary is participating. This is really indicative of risk on. Tech and communications. They were leaders and they are still participating. You could say, well, maybe you're nitpicking a little bit with communications having broken out. That's mainly probably because Google's been a little bit disappointing, especially to me too, because I kept thinking Google would, some of the UOA we were seeing, I thought Google was primed to go, and it didn't really go. But if Meta and Google start to go, this will be helped. But we'll see. But my problem now is, right, when I look at the sector situation video that we're making here, is that everything really looks good, but it maybe is looking too good at the moment. And I feel as though, from my own sort of technical instincts, are saying that you should really see a little mild pullback here. So what I'm thinking is they could pull back a lot of things, and just by getting the Mag 7 to run a little bit, that would really balance things out, and your market really wouldn't go down all that much, but you would do the old corrective action sort of under the surface of wonderful Mag 7 performance. So it's sort of set up to play out that way in my mind. I'm not predicting it. Remember, I don't really do a lot of predictions and forecasts and table pounding. I just try to evaluate the current conditions and try to bring some commentary in just from experience on those, and tell folks what I think is most likely. It would be the most likely scenario or scenarios. And I think that's probably my most likely scenario that I would expect, which is that they do go into some of these Mag 7 names. Those start to do a little bit better than they have thus far. They're not overbought and they have room to run. So it makes a lot of sense to go into there again and then take a lot of profits in something that, like discretionary, that's printed up here, or industrials. And you could back some things off in there for a few bucks and not really hurt anything there. And even XLF and other places, just cool things off for a day or two, bringing some of those RSIs down to more realistic levels, and then just keep the fun going into the 2 holiday weekends that are upcoming and the end of year, which they typically do anyway. That's what we covered in macro measure. We've been covering it virtually all year long. It started somewhere in the wintertime. I can't remember when, but just using that presidential election cycle, year 3, the pre-election year, and then the following year, these are the 2 best years. So the year we're in is the best historically, and the next year is the second best of the 4-year presidential election cycle. So these things are set up to keep running, and the markets just look really good. So there's really nothing for me to share in terms of, well, what about this? What about that? Right? You could say the big thing I could probably focus on for us would be XLE. I mean, I'm not really worried that staples are kind of being left behind, because that's a good sign. I think the fact that they're going into discretionary and not bidding up the defensive one, which would be staples, is a good sign. So that's actually positive. Utilities are rallying because interest rates have been getting smashed, right? Yields have been getting smashed. So that makes all this stuff, again, for a change, a lot of it makes sense. It just is a little too far ahead of itself. One thing I would sort of pick at would be XLRE, but remember, this is why we trade what we see. I think XLE the XLE is a little baffling because you're looking at it saying there's a lot of reasons it seems like to a layman that this thing should be up, but it also has its own unique situation, which I say every time. And you've got to really know what's going on in that market, the specifics. And I'm not close to that anymore. And so you've got to dive in there. It's not as I don't know, it's not as straightforward would be the way to say it. Not as straightforward as it might initially appear. So you would say, well, there's, maybe this war, this one could escalate. There's this, that, and meanwhile, that's really perplexed a lot of people. And again, that's why I would just defer to the technicals. And we've been trying to look lately for reasons to say this is getting a little bit better. So let's get over to just a bigger chart, and we'll start charting a few of these things. But I think these small caps, because I ended up on here, I think these small caps, which we thought were behind and really poised to go a few weeks ago, unfortunately they did. They're a little ahead of themselves. I don't think this is the way you break out. You don't go all the way up to 75 on the RSI and then break out. You could, but normally, right, I would expect a little back off, little gap fill here, then more than likely they come back for it if rates stay low, rates don't do much. I would expect them to keep coming after that because that's got a lot of catch-up room compared to the other indices. But let's get into XLE. And all I would say here, and I'll just bring these two that we usually chart up, is that we started noticing things were not worsening so much over the last few weeks. And so they're trying to hang in there. They're not kind of just careening lower like in a phase like this. So that is a little bit of a positive sign. There's a little bit of positive technical action happening here. You've got to wait till the 50 gets eclipsed, then the 100 before you're feeling much better about this situation. But at least, right, it's sort of trying to put a little bit of a double bottom in, slight positive divergence here. Maybe people are going to see some value there because it hasn't ran. So that's another factor. But again, I would say acquaint yourself to what's really going on, specifics, market specifics in there, factors. But that is not there yet. It's showing a little something, so that's good. Finally, if you're a bull, it might just be a little bit longer. We'll have to wait and see. Of course, if they take the lows out and it's all over, you're still in, really in a situation where the bears are in control. But it seems like the battle's been a little more even-handed over the past, say, month rather than what we'd seen the prior few months coming into the last month. So we'll see if it can hang out, but I think you're looking at least a 50 before you start getting excited about that, right? It's got to show you a little bit more than what it has. But look, if there's news that supports it, then that's a different story. Then you've got to take it more seriously. And we can look and see what crude's doing. And crude is, come on, think or swim. Crude's been performing more poorly generally than, and it kind of did, generally than the XLE. You can see that, again, a week and a half worth of sort of bottoming consolidation, trying to improve a little bit. You got to get through the 20 there in blue, or you're just nowhere, right? You've got nothing to really hang your hat on. So I think 20 is maybe that 74 level, throw a round number out there. You've got to at least start thinking, well, I got to be at 74 as it stands right now before I'm too excited about that thing. So again, they're both similar, but you can see that I think XLE is a little further along. Let's look at the XLRE for starters. Now, this one is one I think on the surface that you have to be baffled by the performance here, right? But remember that there's probably a lot of people baffled, which means there's probably a lot of people that fought this, probably a lot of people that were already positioned short. And so this has been this relentless sort of jam job, just a remarkable turnaround, something it kind of took out the highs, right? Versus here, it had such a strong run. It was able to really erase, right, months and months and months worth of poor performance in just a little over 1 month, maybe a month and a half to 2 months. But that's overbought now. We can see that 76 RSI reading. Another one I would say for cooling off, but look, that and the XHB, you're like, well, what's going on here? Interest rates are still high, things have slowed down, prices are pure madness. It is, right? But again, these two, I think, are some of the finest examples of the trade what you see kind of mantra that we share all the time that probably a lot of rebels are sick of hearing. But and I understand that really, but it's just you never know how new people are, and that's something that I think the Peter Lynch book way back when about kind of like, well, one up on Wall Street, and I'm not really criticizing him, just saying that what that sort of led to were people thinking they could put two and two together and well, this is a good story, or this is what makes sense based on what I know, and my ears to the ground better than Wall Street analysts. And so I'm not even saying there's anything wrong with that. I'm just saying that you know, if you kind of think like a layman, and I do myself because I'm not a home building sector expert, I wonder how this is possible, but only because of my experience in the market do I know this is not only possible, but often probable as to what that just happened here. And we've actually taken bullish trades in this, despite my feelings is that this thing's in big trouble longer term, more than likely. But this is out of control. You're at 82 on the RSI, but this is exactly what can happen when there's a sector that's hated for all the right reasons and too many people see it and it becomes a crowded trade. And the deep pockets boys get a handle on all that and they work it to max. And that's what they've just done here. So, but again, maybe I'm wrong. Maybe they keep printing money, but these things are at least short term overdone, right? They all still look really good long term. I still think there's a shot that we are in this protracted bull trap. I'm not someone hanging on like as a bear. I'm someone who's more than happy and prefers to embrace the bullish side of everything for everyone's sake for all the right reasons. But I'm just saying that I have a hard time with these stories that are being sold to me too hard. And so just my cynicism's, I think, well founded after spending as much time as I have in the markets over the last 3 decades. But anyway, there you go. That thing's overdone. Now let's look at another important sector, which would be the semis. And this has been one we've been bullish on. This has been one we said, we know it's a leader. I think it's very important, and it's at an all-time high. Right. And I think this is one of the leadership areas for the obvious reasons. This has got a lot more room to go. I think right now, though, it's overdone. It's at 77. I think if the Bulls were smart, not something I would accuse them of very often, but if they were smart, I would say that, short-term bull traders, there's just a foaming at the mouth group out there. It just seems like that is bullish all the time. And that's the hard part for me in terms of taking that seriously when you're always the same way all the time, or seemingly you seem that way. But look, this to me is just overdone. Again, I think you back it off. If you're smart, you back this off a little bit, take some of that froth out of there, maybe just for a day or two. Maybe you just come down 2% from the high, maybe 3% from the high maximum, and then you set yourself up to really finish the year strongly without being so overbought. But that is overbought, and if it keeps going, would I keep trading it as a bull? Yes, I would. Right, but what I would do is I would be when it gets really stretched on some of your intradays, right? I'm rolling very quickly as a bull because I know that I'm getting further and further delirious the higher I go. And these types of verticalness, this type of verticalness is not extreme versus other things that I've seen, but it is fairly extreme. And usually this doesn't last for very long. And when it does ultimately give way, it pulls back pretty quickly. So you could see something like this where they got a little crazy for 3 or 4 sessions, quick pullback. Gets crazy for 3 or 4 sessions, quick pullback. That's all I'm really talking about because the trend to me is up and they've broken this thing out of the consolidation, something we covered a while ago. But that's an important sector. I don't know how much better you want it to act. I mean, it closed barely off the all-time high. I don't, so that's why I have a really hard time fighting against the market technically. If we look at the bigger picture on this thing, we've been talking about how these things had all these important things. These big things have these great chart patterns in them, like cup and handles, which I think is a powerful pattern. It has been in my experience. You busted from the lower part of the handle all the way through the top of the handle, kept going, got back right towards the highest highs, kind of hesitated there, backed off, pulled off, and now you start going again. So to me, like this looks good. I mean, it's just overbought in the short run. It would probably be well served by, again, from here, 2% back, and I think you're golden. 2% back, they start buying it again into the holiday weekend. I would say that probably makes a lot of sense. Again, save for what I said a gazillion times in macro measure, save for the fact that uh, you you might have a news shifting situation, right? If you have a dynamic shift in some kind of geopolitical development or something with that has to do with rates for whatever reason, I don't know what it would be. I'm just saying that, of course, could change everything quickly. But other than something dramatic like that or a Washington thing, I don't know what it would be. But other than that, this stuff's set up to try to keep rallying not only through the end of the year, I think, but into next year. So we are having a market outlook discussion coming up this Tuesday, I think it is, or the following Tuesday. So I think from like 4 to 5:30, one of these Tuesdays Eastern time, we're going to have, I think, John and Pete and Ryan and Greg, and I'm thinking maybe other folks. I don't know exactly who all is coming, but we try to have like a forward looking thing. And so I'll be sharing probably the same thing unless something dramatic changes, but I just think this thing's set up to keep rallying. I'm not so sure I buy into that rates are coming down sooner than later, but or that there's going to be a soft landing. I'm not a buyer of any of that. I just have to share the AI hype and what that could do to buoy prices, maybe irrationally in the short run, that later become justified. And that's one thing I think is kind of the hidden danger right now if you're a bear. But that's something I talked about sort of in macro measure. Anyway, this XAU, I think with the dollar getting rocked, this makes sense that it's popped up. And it's popped up and through, and it came down and it touched our resistance line, and it reversed nicely from below there, just below it, like they all often do, right? And then they reversed it up. So now it's on the cusp of really taking out the recent high. So we need to see this take out the recent high. This isn't overbought. I don't know. To me right now, like I do think there's a trade here if the dollar keeps going down. The dollar did reverse on Friday though, and so did yields a little off the low. We'll see. They're kind of been in free fall, so that's a little tough. But right now, but this is showing something good where it's at least trying to change trend. It's got the lowest low, higher low, right? This high's lower than this one. This high is basically a non-factor, other than it kept you wondering. That's the thing in the past because this high eclipsed all these highs. So now you've got higher high, higher low, and now this thing's being tested. Can it get through? And so that's what you've got to look for. It got close on Thursday, backed off Friday. The next level up is going to be probably, let's round it off at 131. Just throw out a number 131, 132. So right in there, and that's what's going to open that up to greener pastures in my mind. But I think things are swinging around here positively finally. I'm starting to feel a little bit better about it in terms of the longer term forecast. It's been a while. I've been reluctant to really turn in a big way. I'm going to trade short term in here for these little bursts, but I'm not really committed to the long term yet. I'm getting really close to saying, yeah, I think this thing's ready to start going. I think you're going to need to have gold get above, get above the recent highs, and which were, I think, the all-time highs. But again, that's sort of nominal, but it needs to get above that and go. And you'll start to really break out. But this stuff is showing us something finally, and it's hanging in there. So it needs to just do a little bit more work. Probably if it can close out the month strongly, that might be all it needs to really start to launch a better trend in here, put better price action together to finish the month. it does that, I would probably be more than willing to stay on board. But I think if it breaks out from here and puts out new closing high in there, I would start giving it, I'm really more about giving it the benefit of the doubt now than I was for the last several months when it was just struggling. We just couldn't find enough there on the big picture charts. But remember, these big picture charts in this are very compelling, right? So that's why we spend time on this, because I know it's interesting to some people, but at all times. But I think a lot of people should be interested in this because this sort of has a cup and handle in it. Gold and silver do, and these things, if they start to break out, it's a pretty big pattern. This is not the most pretty cup and handle I think I've ever seen. Let's take a look at SLV. But if I get you that really big picture look, you can see it better, I think, here on the SLV. You can see more of a cup and then this kind of protracted handle. But this thing's really getting close, and you'd have to do more work naturally in these things, but it's getting close to maybe launching, right? So it's got a little momentum. It just needs to finish out the month. I think it needs to finish the month out better. That's all. And then I'd start taking it much more. I'm still getting pretty serious about it now, but I would be like, you got to take this seriously, because this thing's really. I think I painted this for somebody before where they were asking me why I was sort of coming close to pounding the table, and I just said because these big picture things are no joke. As much as it seems like to people that don't chart, like, well, are you kidding me, right? You spot something that looks like a cup with a handle and you're going to get excited. But my experience has been very good from cup and handle patterns. So yeah, I'm excited, and it's really close, right? Where a good burst, this thing could be on its way. So I would keep that in mind. Trying to think of anything else that we typically cover. I don't want to go into the weeds with a wooden cut and all these other things, but these are the big picture things. So the summary really is a lot of sectors are overbought. You check your daily RSIs on those. But remember that Mag 7 is ready to go potentially if they can ignite that. And that could really paper over or mask weakness, across the board where maybe there's some profit taking. So that might be something to look forward to. If you want to sort of have a little bit long short on, in other words, like if what I'm seeing in the chart starts to bear out, you could be long some of those things, maybe get yourself involved there. And some of the overbought stuff, if you start to see them take profits in it, you could have maybe some shorts there to have some balance on if you want. Just a thought, just to share on that, because that does seem to maybe be setting up. Only time will tell, but that's it. Let me think if there's anything else that we really talk about sector wise. I know we touch on other things at times, but I haven't really. I don't think we usually touch on energy, which we did. We usually touch on real estate on the side, semis we touched, gold, silver, and certainly energy. But yeah, I think that's it. I would just note probably that, look, if you look at things like this, XLF, oh, double F is not what I wanted. Let's see, XLF. There we go. What I would say is, like, look, these are three important sectors, and these are on the big picture. If you look at XLF, this thing is clearing out, right? Almost 2 years worth of consolidation. That's a kind of a big deal. 2 years of consolidation from your financial sector is a pretty big deal to the year leaving that. XTN hasn't quite gotten that far, but it did start to uh, really recover from looking really bleak. So that's been a big turnaround there. So that's got work to do, but you can see, right? You can see that if that thing's really out of the woods, and the technicals on the bigger picture charts are shaping up pretty good. There's another really important sector. Another really important sector would be the uh, XLY, consumer discretionary. And that you can see, I do have lines there. My bad. I didn't think I had anything on that one, but look at that. I mean, that's really close to clearing out as well. And that's about 18 to 20 months of consolidation. It's on the verge of clearing. That's also a big deal. So these are some really important sectors. We know what semis have done, right? That's an important sector. Maybe the most important these days. I mean, look at that. That's got the cup and handle-esque look to it, and it busted out through the top, and it's hard to argue with how good that thing looked and performed. XLK tech sector kind of a little bit bigger than just semis. It's very similar, right? So, and your communications, these are not chump change, little rinky dink things that are happening. Look at this, right? This is also on the verge of clearing a lot out technically. So again, like I said, like the last couple of weeks I've been saying it's really hard to find bad things to say about this market technically. It's just for me, it is. Maybe other people are finding things. I know there's a lot of other tabs I could share, but I could probably do an hour of tabs every week video and not even fit everything in that we would probably like to mention just so everyone's aware of different things. But that's just the nature of the beast these days with information overload. It's out, everywhere. There's a lot of good points people make and all this, but I just and I think it's important to keep track of all this stuff to a degree, but I don't think you can let that sway you from engaging in the market, especially as a short-term trader. I think you have to just trade the market that's in front of you. We say trade what you see all the time. It's one of our mantras, I guess, at this point. And the reason for that is, right, that things cannot make sense for a long time. And so if you want to benefit from the market, and the way we really benefit are from price changes, right? The price appreciation of our options that we buy. And or if you're doing credit spreads, the loss of value, and so on and so forth. But you get the idea. That happens through time. It happens through volatility, changes in volatility, but mainly it happens through price changes from the underlying stock or ETF. And these price changes are what really make it possible, right, for us to profit from markets movement. And the market's movement looks very good, and it has looked very good for a while. And it's hard to really fight against that, even if you're like me and you have your reservations that you think are common sense, well founded, and just have served you well in the past. I still wouldn't trade it that way. I still think you have to use the charts and what they're telling you. I just want to share that if you're new to this stuff, because that took me a while to just divorce myself completely from what the professors told me in my econ classes and things like that. So once I finally did that, it was a big moment for me to stop trying to synthesize economics, finance, and stock market behavior. That was the fallacy that I bought into initially, and fortunately cured myself of. But that's what I would share with you, because this stuff can not make sense for a long time. And just not to be cryptic, to kind of fill it out and end on this, this whole AI hype thing could start out exactly as hype and persist as hype, but then it could become real. And that's the thing that I think I didn't have the experience in the 90s to really catch on to what was happening soon enough in a big way, where I was more or less like, yeah, this is going to happen. This is just going to keep going as much as it did. After a while, I started thinking, probably like a lot of people, I know there were some, really very famous investors that after this thing ran for 3 or 4 years, they were thinking kind of like at that point where I was, where it was like, this has now gotten really up there. How much further can it go? And then it went for really like almost another 2 years. And you were just like, seriously? Whoa, what's going on here? It makes no sense. And you were right, but you had to wait until after the March of 2000 to start really profiting from that, because that's how long it took for the trend to change. And so if you could have really stayed long and kept staying long in a big way and done extremely well. But it made no sense to do that if you were trying to factor in historical valuations and so on and so forth. But that's the lesson that, I learned, that I could have been so much more aggressive about that at the time for longer. And I didn't stay as aggressive as long as the market told me to, because I didn't know how to listen to it as well. as I do now. And I would say the hype can get this thing started, which it has. This thing can persist, excuse me, and then there could actually be in 2 or 3 years some real bottom line improvement courtesy of AI. It could take a while to adapt, but the hype might keep things buoyed long enough for reality to catch up. And then if you fought against it and weren't willing to buy in, now you're way up, and the dividends are so-called are being paid. The so-called dividends are being paid as a result of the AI. And you're still in the starting blocks. So I'm not trying to scare anyone into being a bull. I'm just saying I've been thinking about it, saying like, okay, this is starting to get a little. Um, I know there's squeezing going on. I know all the different factors, or a lot of them, I should say, just from keeping apprised of what's going on, in the news and on certain websites and on Twitter and stuff like that, as to how poor positioning, different seasonality, cyclicality, all the things we cover in macro measure. I know a lot of the factors, but this whole year that's upcoming looks like it's primed to get off to a really good start, which means this thing's looking like it's going to keep going again without a real strong shift in the news. So I've been thinking, okay, well, what's going to really let this happen? And I think I found things this week that, the inflation issue where you could run 10% only to get back to where you really were before at the highs. If you adjust for inflation, that certainly means that stocks are undervalued at this point in that way of thinking of it. And the other thing would be, again, if they start pricing a lot of this AI hype in, and it stays that way, and you get that kind of spirit of the times that we got in the 90s to a degree, that can keep things buoyed for a while, and then you might actually get real payoff. So from it, and then if you're sitting it out, you're wondering, well, how did this become real? And I'm just saying that it can become real. It can be real. So the thing is that there's a lot of people that just are knee-jerk buyers, and they might not even be well-founded. But if you buy the hype early, you can do very well, right? And then if you avoid the hype, um, you could really miss out. And so, I just wanted to make that clear, because I'm not turning into a economic bull, but I'm just saying that I've got to allow for that, and that those types of factors to enter my thinking. And so, I think what you do as a response to that is, if you're not well versed in options, you get well versed in options and you use options, and you'll feel a lot more comfortable because you'll be able to control the same amount of stock for a lot less capital with a lot less ultimate risk, and you'll have a lot more risk control as well. And that's how you talk yourself into getting involved in a way that would be much more comfortable if you're really still reluctant to put money into stocks or ETFs directly rather than instead of options. I would definitely lean towards options. If you're uncomfortable, you just got to get options down. Once you get options down, then all those doors open up for you, and you could, with only 20% of the capital at risk that you would have otherwise, that'll allow you to be a lot more courageous about entering into a market that you have a hard time buying into. And that's, of course, only if some of the things we're discussing end up bearing out, right? News could shift everything tomorrow, literally, right? Or even over the weekend, and it might all be off the table for all we know if really bad news develops somehow, somewhere. But I'm just starting to put some of this food for thought out there, because these are things I've been thinking about. And I don't have the time to do the investing side reading that I used to. I wish I did, but hopefully I'll get back to that at some point. But these are just thoughts that occurred to me on my own that are maybe not deep thoughts, but just simple things that got me thinking just from the experiences I've had in the market previously. And so people can be delusional for a while. I mean, Ryan and I were in 2006, we were thinking this market's topped out. The whole housing market's going to pull the stock market down, pull the economy down. And it did. We didn't start shorting it then, but we were thinking it was going to happen anytime. But the trends were not showing it yet. So we had to keep going with the market. I think in August of 2007, that's when we really started getting serious. And then when we saw the top get put in later that year, that's when we started to trade it to the downside. And so our timing was good, but we had to be patient for about a year, maybe even a little bit longer, maybe like 16 months, I think, from when Bernanke tried to act as if there were no problems in subprime. But anyway, long story, but yeah, so you just learn. And so that's what I'm trying to share, that, these thoughts, because I know a lot of people get hung up on the economic side of things, the financial side of things, valuations. That's what I was really trained to do from my time in college, and it didn't help me as much as it should have, because I wasn't thinking about um, market market participant behavior. I was thinking more or less the traditional way of finance and econ majors, right? So that's what happens when you're young. You've got to learn. You've got a lot to learn, a lot more to learn than you think you do, I guess. But anyway, just wanted to share that. Sorry about the time on that one, but just want to put that out there so that if there is this incredible opportunity that develops, at least you had a shot to think about it, and we'll see what comes our way. So thanks for tuning in. I hope something I share with you in sector situation or macro measure helps you out this week, or a week in the future. I want to wish everyone a great finish to their weekend, a great upcoming week ahead. If you're traveling through the holidays, have a great time wherever you go. Have a safe journey, and have a great holiday season overall. And we'll be doing that forward-looking stuff either this Tuesday or next Tuesday at Market Rebellion. So thanks again for tuning in, everyone. Take care.